So thank you for coming here today. Stav from Alta, early stage fund, Ron, early growth fund, Empathy, and Ofer, who's just sold his company beginning to end in a year and a half, early stage, mid stage, late stage, and now is VP or senior VP at Palo Alto, right?
City of SASE for Palo Alto.
Wow, that's you're a CEO of Palo Alto. Amazing. And so, and really, just to we find ourselves at the beginning of 2024 in a situation where there are down rounds happening, there are layoffs happening, there are AI hype waves happening. The market is come off by 50% in funding, but we're starting to see some sparks. And really, to understand a bit about in this situation, how we positioning ourselves for the year ahead, and in some respects, Israel is we're here in Israel today, and these are 3 Israeli companies, and there've been some things that have happened along the way, which gives us a unique maybe perspective and a unique set of challenges which may inform us of the year ahead. And so, really, wanted to start off maybe by asking you, in the last 3 months. Since October 7th, a lot has happened. Many of your staff were mobilized. Our numbers are 15% or so of staff. Another 30% of staff were volunteering in one way or another. Clearly, it has some impact on the business, but it's amazing to see, certainly from the outside, that Entrée Capital has managed, its companies have managed to significantly raise funds. We've had 4 exits in the last 3 months. We've made new investments. Almost despite the odds, things are going forwards. And maybe, Stav, to start with you, what does resilience mean to you? What has it meant in the last 3 months to you?
Yeah, so I think before we started, we talked a bit, 4 of us, and you said something I really connected to, that resilience is not just in this hard time for CEOs and founder. You need to be resilient at any time when you found a startup. And for us, 4 of our 10 employees went to service, so it was a big chunk of the company. And also the women that didn't went to service, their husbands went to service, so it was really like the entire company. But we don't work remote, and every day we're coming to the office, and even part of the people didn't have like a safe room in their house, so it was really time to come to the office and to be together and to focus and what we love to do was, I feel like, comfort. We found comfort in it, so I think this is it was like a contradiction to find it, like to try to be resilient. It was actually was the solving the part. So it gave us more resilience. So yeah, this was those kind.
How did you find it, Talon?
Well, it was very weird at the beginning. I'm sure like everyone here just adapting to the situation. So of course, the basics is making sure everyone's okay and understanding who's drafted, who's not. The spouse that is not drafted is definitely a meaningful persona, I would say, that we took us a few days or maybe even weeks to fully comprehend how unique is that persona from an HR perspective, because you see them coming in and out, they're physically in the office, but from a presentism, absenteeism standpoint, they're not really there. They're not able to bring their whole selves to work because most cases, let's take just an example, spouse. Let's say it's a wife and the husband is literally in Gaza, 2-3 kids and a dog. Everyone's trying to be next to the safe room. Maybe the support circle is not what used to be just a few weeks in my school family. So it's really an impossible job. She has not just one or she has three jobs right now, trying to make all that. So took us a while to put a unique spotlight on that persona. We have unusual 70% lady on the team at empathy. And from a reserve standpoint, mostly in Israel, mostly guys that were drafted for reserves. While, of course, from a mandatory service standpoint, women were in the front of this war from day one. But from a reserve standpoint, it was mostly guys. So really understanding that took us a movement, supporting them to the point that we were able to show resilience together. From a more broader resilience standpoint, as there's a downtown, there's economy, there's macro, I'd say every time something like this happens, it's really a good opportunity to go back to basics and think about why you started this company from the floor. And, a lot of us have a big mission statement when you start up. Usually something very impressive, something about changing the world in one way or another. And as time goes by, it's really important to try and get back to that core fundamental purpose and see, am I still really on track to do maybe not world-changing impact, but meaningful, positive impact. And a macro negative event is a really good reason to rethink, and make sure that we're really on track to do something purposeful. And the way it's connected to resilience is, if you're truly mission-driven, if you're truly working on something you care about, and not just as a statement, I do this system, and if the system works, it helps this lady, and then the lady helps the guy, and the business gets this. If it's connected to a mission that you care about, then you can't really lose. And even if you had a really bad day, it's a fight worth fighting.
So interesting you say that. We have on our team Maya, who's a psychologist and an organizational development specialist. And what we did in the last 3 months was really sit down and run sessions for founding teams, HR teams, and spouses, not just of Entrée, but for portfolio companies, to try and help them navigate through this. It's not just the person who's immobilized or the loss of the position at work. It's that whole area around it. What surprised you in the last 3 months, Ofer?
I think the main thing that we have seen, the business perception from the outside. So I think that the first part is obviously to support the team and the significant others of the employees. I think what was for us the most concerning was how will our customers, how will our prospects look at the situation in Israel? One thing that kind of really changed my perception was that one of my board members said, all of us have been following the conflict, for example, between Russia and Ukraine. But do we really know what happens there day to day? Like, for example, if I tell you that most Ukrainian companies work almost normally, would that be your perception from the outside? No. Say, hey, it's an unstable situation. Think about it. It may be most likely that your prospect customers say right now about Israel. Not necessarily our prospects understand that while in the south and in the north the situation is completely tragic, companies are still functioning almost 100% here in Tel Aviv. The perception from the outside world, by the way, both from our employees, not only from prospects. Like, think about it. I have now probably 30% of my team outside of Israel, sales, marketing, customer success, etc. Is this startup from Israel as stable as American cybersecurity startup? Is their position safe? Is working for Talon still as safe as working for the equivalent US company? Should we stay in the company? Should we look now for a new company? Like, just to think about this thing that our foreign employees, prospects, customers, so I know, because at the end of the day, especially the world of cybersecurity, but I think in general, every business, it's about risk management. If the risk perception working with Israeli company is increased. The right thing for them to do is to go and work with a different company and not to remain working with Israeli startups. So I think that part of communication, in my opinion, the most critical. After, let's say, 3-4 weeks, that became better. So initially, it's mainly to support the employees, significant others, what we can obviously for the people that have been impacted in Israel. But the second phase for business stability is communication. And communication for us has been a key part to say, look, that's what happens here in Israel. Yes, we may be on an all-heads call and has twice an alarm. All of us will go to the shelter, but 10 minutes after, the call continues. That's life. It's okay. By the way, to even explain, that's how we've been living the last 20, 30 years. It's not, fortunately, new. And I think that part of communication has been the most critical. And the other part is, I guess, resilience is agility and to adapt ourselves to new situations. So, like, all of us have been able to cross the situation of COVID, and now this feels like that always we're being a challenge like this again, startups, and especially in Israel. But from the positive side of it, I think it challenges us always kind of to say, okay, is our foundation for all of our assumptions? Are these foundation assumptions are still accurate? Does it going to survive the next challenge? And, with all due respect, from a business perspective, both COVID and now the war typically is not the reason why companies are not successful, but completely wrong business assumption about the market, the execution. So I think that causes us to take 2 steps back to look at everything that we're picking and to ask ourselves, are the assumptions still accurate? So a lot of challenges, but also opportunities out of it, just to be a more healthy and relevant customer business for our clients.
So, talking about that and moving forwards, one of the things that has happened in Israel and elsewhere in the last 6 months is that there have been Moody's, S&P downgrades, things like that happening, not just in Israel, and other places around the world as well. And practically speaking, for the size of company that you are today, do you see an effect short-term, medium-term? Do you see it just in the ordinary course of business? How does it affect you? One?
I think that Moody's update is not happening. Closed environment. It's not just the situation, the war in Gaza, but also an administration that's been around for more than a year with a very low support rate, to say the least. It's thousands on the street. Something that I would call a hit for a judicial coup. That was, of course, miserably failed because of the resilience and camaraderie of the Israeli civilian society. And I've been at all an investor or even a prospect. I think, for better and for worse, Israel is getting a lot of headlines. In general, and I think this is where I might be naive, but that's the devil's advocate to the old member that said, people might think about us as Russia-Ukraine conflict. Additionally, 16, 17 million Jews on the planet are getting unproportional or making unproportional noise and attention. So I'd like to hope that even in this environment, people are getting at least some level of updates. If they're getting their news updates from Gen Z, TikTok in the US, we might be in a challenging environment. But they're getting some update of what's going on because Israel was always getting more attention than its proportional size. And as such, I feel like people are also paying attention to the fact that there is a lot of strength in the civilian society. And that's what's, it's literally what the reports also say. And the ones that didn't change their forecast and the ones that did always underscore the fact that people are so united is a stress. For me personally, getting into these conversations that, of course, we're selling to the US market, but are not going to jump on a call with a life insurance carrier and start asking me about such open and direct questions. The most direct thing you might hear is something like, I don't entirely disagree. My sign to completely change the
Topic.
But when it does, as a topic, when it pops, man, I'm still trying to calculate the minus of plus. I don't know how to do it. I know it. Just start from scratch. When that happens, I feel like they do see the resilience of the people itself. And I personally very lucky to not be directly impacted by this atrocities down south. I follow the news every day, but I am actually more optimistic about the future of Israel today than I was in September. Because the feeling I was walking with, after 11 months of going every Saturday to this corner right here outside the office, and screaming our hearts out, saying, "How come we? Why don't we have everyone? What are they missing? What's the big coincidence that all of a sudden someone that was so much about the independence of the Supreme Court happens to have some allegations and now is against it? How is that so complicated to understand the challenge? And now that the country has more camaraderie, forced camaraderie, but literally together and united, it fills me with optimism again. And I think as founders, our job is to always remain naive and optimistic. So very important issue.
Yeah. Ofer, so like at Palo Alto now, how do you see the change in the Moody's rating? Look, practically in terms of interest rates or inflation or country risk rating. How do you see an impact? Palo Alto has got a lot of people here in Israel. How does that make a change or change your thinking and your management of the Israeli subsidiary?
So I have to say that now, especially as Palo Alto, as part of Palo Alto, then I don't see enough of the financial impacts from my position, so I will not be able to speak smartly about that impact. I can say that as an individual, I think that mainly this adds more concerns, at least for me, about how will the world see us moving forward, and the financial resilience. Like at the end of the day, we as a startup community here are very much dependent about external capital coming to Israel, and all of these indications, if at the end of the day it will be perceived that Israel is not a safe financial hub, it will be harder for the growth around funding. And again, at the end of the day, it's perception, especially when we're looking at the private market, private valuation. If the perception is that Israel is riskier and the valuations go down, the emission is being increased, harder for the companies to grow. It adds risk for the process of the entrepreneur, right? So it's mainly more than anything else, I think, for that environment is again marketing, communication, perception. In this case, for the investor community, and I wouldn't take this news lightly.
Yeah. Having said that, in the last quarter of last year, there was over $2 billion of fresh funds that were invested in Israel, which was slightly less than the quarter before, but very similar to the same quarter a year ago.
Just the question is if that capital entered in that quarter or published in that quarter, which many times is hard.
Yes, always hard. But
maybe that it's actually reflecting the quarter before.
Yeah. But
Question mark.
yes, correct. But moving from that, maybe it's worth discussing, how do you see, and Stav, maybe you can start, how do you see 2024? How do you see this year for your business? What are you planning? What's going to happen? How are you planning your year ahead? What are you doing? Is it different from last year? How are you changing your growth forecast? Are you going to be a fantastic company or just a great company?
So I think during the last year, we were focusing on building the product and starting the foundation of the marketing. And during this year, we're planning to start growth, and we did our kind of forecast for the year, and I don't think it's changed much because of the past month. I think the past month was also kind of make us rethink about how can we build something much stronger with even less people or less resources. And I don't think it's changed the way we see the next year. I think we want to be a great company. I think I think that the plans are stayed big for the next year.
So you're saying that you're planning to still burn a similar amount, still grow by the same plans that you had from when you were thinking about it a year ago?
Yeah, I think it haven't changed. It haven't changed a lot. It's we adjusted by what we learned this year, but I don't think anything changed because of the last.
Great, yeah. Ron, what's happening at Empathy?
I think there's a lot of companies in Israel that have unique cash positions from 2021, 2022, and they need to play a guessing game about reserves and budget, and specifically the interest rate that is extremely high and almost some sort of arbitrage locally compared to what our U.S. bank accounts can generate.
Is that because you're earning interest in 5%, 6% interest on dollars, and you're spending a fair amount of your money is in shekels, which is it's still kind of a bit depreciated from this place last year?
Even before getting into the hedging of that is out of macro, just thinking about X amount of cash position that company have. Empathy aside, we have much bigger companies in Israel that raise hundreds of millions of dollars, and even billions of dollars in cash, private and public companies. When you think about the financial year and the budget, one of the biggest questions, what's going to be the interest rate? You're correct that 6% in Israel is right now nothing crazy. Actually, many in the room are able to secure probably 6.9 even with some minimal hedging. And that's impacting alternative costs, because you need to ask yourselves, okay, so I'm doubling down on this new growth engine. I'm doubling down on this expansion play. I'm thinking about a new product line, which is really our job and premise to high-risk investors by rotation to take an outsized risk and create outsized returns. We need to believe that the delta is better for this year than the no-risk guarantee as you're still figuring out your other growth engines that you already made investments. Of course, it doesn't mean not to take risk. Nobody's in this business in order to guard the money. We're not banks.
But the one hand is save the money, don't spend it, and I buy another 1 or 2 months to live. The other side is I've got this 1 or 2 extra months of interest. Let me spend it and double down on growth. That's the other extreme.
Right. I think the underlying assumption here is that the interest is not going to stay as high. It's not going to go back to zero, but it's not going to stay as high all the long term. And of course, it's just my 2 cents. It's not worth much more than that when you were dependent on friends in the US to look at their federal bank. But my advice here would be should take that into consideration because it's a part of the alternative cost when you're asking about budget, which is not the most important thing from a private early stage startup perspective. Of course, it's a deliverable for the board. Of course, it's something you're approving. But an early stage startup is not measured on predictability. It's not a public company. If it's doing 10% more, 10% less, it's less about the accuracy of the predictability. It's more about the logic behind it.
So at empathy, practically, what are like 2 or 3 things that you're going to do this year?
So those of you less familiar, just at high level, we are operating in the very non-trivial space of end of life. It's a very unique space in which we get to empower bereaved families and help them with the full range of grief and estate needs. We work primarily with life insurance companies like MetLife, Eurofly, Guardian, Alto, Securian, and others. So basically when someone calls in and say, I lost my dad, where's my money? The life insurance transaction for the last 300 years. Instead of just saying, sorry for your loss, check is in the mail, they get to say, check is in the mail, but I'm not going anywhere. I'm going to stick around with you in the days, weeks, and months. I'm going to help you with all the things that you need to do right now. And that is adding value to the life insurance company in terms of asset retention, generation loyalty. We're only working in the US right now. And one of the big questions for us right now is expanding into Europe and Canada, where we have a lot of demand from top carriers, but requires a lot of heavy, especially on the state administration and taxation side, which is state specific. Basically a toolbox for state settlement, combined with like a headspace for Greece, if you will. Very unique combination. And another thing we're expanding into, and already made the investment, made this decision, is not stay only at the at-need state after the loss, but also going to estate planning before the loss, help people get more prepared with digital wills, trusts, guardianship documents, etc. And now when a third opportunity reveals itself, as an example, we're really thinking twice about the amount of growth engines and amount of risk we want to take on a calendar year. And just to summarize this long blurb, I would say, again, back to basics, especially when that alternative cost is high, especially when you're not looking to hire 100 people a month. Back to basics is talent acquisition. Make sure that every talent on the team is outstanding. Everyone knows here's the feeling of a new hire who joined 2 months ago. And now you're like, oh my God, this was a really good hire. This person is already showing immense value. But if you didn't feel like that about he or she sitting next, the person sitting next to him, then something's up. So just looking again and again at your talent acquisition process, popping ways if people are not bringing 100% day in, day out, making sure you're constantly raising the talent bar and performance culture, I think is good for a macro environment like this, and it's good for any macro environment.
So you feel that hiring strong, hiring well, and kind of very early making a decision if someone's going to work hard or not is critical.
Always, but especially relevant right now because the amount of people needs diploma.
Yeah.
Not always the case.
Because of the layoffs and things like that.
There's terrific talent outside, but there's also a lot of signal to noise ratio. A lot of people are looking for jobs, but you need to do a deeper, more thorough job in looking for references, etc. Basically, if I have to summarize my entire experience in one line, I would say, never skip references. Never, ever, even if your leaders are saying, this guy's amazing, never skip key references. And the definition of a reference is something that had nothing but flying colors. So any reference call, think about yourself, hopping on a call with someone asking about an ex-employee. It's a neutral, positive conversation. You're kind of rounding things up because you don't want to damage your job, your personal trajectory. If you have even a slight risk, something that is really good at this, but make sure you pay attention to that. For me, anything that is not flying color on a reference call is a skip. and it has to have flying colors on a reference call, especially if someone provided a reference call itself. Let alone if you found it yourself, maybe a little bit more flexible.
Yeah.
No, actually, it's the keyword. You just if the guidance that I have for my team is we ask for the references. So let's say someone goes into a process. I would like to speak with your last manager. I've seen that you've been a developer in that company, so I would like to be their team manager who managed you for that and that. And also in the previous time, I would like to have one employee and one manager or peer. Like I wouldn't go around the person, but I would say I would like to speak specifically with that person, not to allow the individual to choose who am I getting as a reference. So I wouldn't go around, but I want to direct exactly. I want that person, that person, that person.
Okay. So
It's not having bias.
yeah, one of the things that we base our investments on, we kind of call it the 4 T's, which is team, timing, TAM, and technology. And so, the founder comes with technology for a certain TAM, and really we focus our efforts on, therefore, if we like the technology and the size of the market, we focus on the 2 critical things, which is timing and team. And you've addressed the team aspect pretty well, because in our formula, everything is to the power of the team. And so it's the most important factor. The second most is timing. And so the follow-up natural question is 2024 the right timing? Is it the right timing to for people to now be in the market, to raise money, to, or should they be waiting it out? Is the market coming back? What are you seeing? And certainly it kind of depends on your area of the market, but also startups in general. What are you seeing? We're 2 months into the year. Typically in a growing market or a rapidly moving market, you're starting to get phone calls left, right, and center from VCs who are starting to inquire what's happening and things like that. And maybe, Stav, you want to just take a quick stab at it and then run. And then, Ofer, maybe you can answer in a different context, because you raised money 18 months ago as a seed round, then you raised money 6 months ago or something as an A, and then you sold. Coming into a market that's we think is coming out of a recession, we think it's getting into a go-go market, and you had a very different approach to all of this. So maybe let's give it a bet.
Maybe I can just refer first for the team part, because I really connected to it, and we have 10 people, as I said, but we already had 2 layoff. We fired 2 people, and exactly from the same reason that you said, that after 2 months, if you're not saying like what a great recruit that was, so we are part ways, and I think this is a really, really important part in the beginning, always, but also in the beginning of the startup, because every person is a really core member of like how we develop the team and the culture. And in terms of the beginning, the two months of this year, maybe a little bit about Alta and what we're doing is Alta is helping revenue teams to understand the revenue engine, and I feel like for us, the beginning of the year is like the planning time for the year. So it's always like a good time for prospecting and talk to customers, especially around the board meetings and like after the board meetings. So they understand, they want to understand better the revenue engine, understand where the potential for the next year, where are the growth opportunities. So for us, in terms of prospecting, 2024 started. We feel like we succeed to talk to customers. We're getting a good good reference, like a good how do you say feedbacks. Yes, thank you. And yeah, like the same as before, I feel like 2024 can be a great year. Yeah.
Right. On.
I think if you're sitting right here and thinking about starting a new business, the year that shouldn't make any difference. I think it's always about burning the boats and just start. If you say, I have this idea, but I want to wait for 2025 and see what happens. Or I have this thing that I'm really passionate about, but I'm lacking some experience. So I work amazing team and be as a product manager and leave after a year or two. There are stories like that, yes. But I think on the first year of being a first-time founder, you learn more relevant experience about starting an organization than maybe even a decade of working in an environment of high excellency and performance, because the relevance is not the same. Would you be more equipped? Yes, but 1% more, not just the relevant experience. So if you want to start something, I'd never say it's a good market or a bad market. There's pros and cons to anything. There's something about the more sane valuations that you can get as an early stage funding process today that will actually be more healthy for your A round 18 months from now, versus someone who maybe raised money 18 months ago or 2 years ago and wasn't able to grow into the valuation. It's a new challenge. So, long story short, when it comes to early stage startups, I think timing is just not a big part of the decision for starting it. Definitely a big discussion for investing in. But I would say the team is the only big team, and the other three, it's Tam, I would remove it altogether. Tam is something VCs invented. Every new category that does have an addressable market. If you're doing SaaS, cyber, of course, the understanding the addressable size of the opportunity is relevant. But anything that is out of the blue and isn't defined as health tech or fintech just yet,
it's infinite. Time. That's opportunities. That's opportunities out.
Talking high level.
Sure.
Not a specific app in here.
Sure. Ofer, so what happened? We were investors.
I'm still trying to understand, honestly. Look, I think it was interesting, right? Because at least in terms of kind of the vision, I think that Ofer came much earlier than was anticipated. And for me, there is kind of a clear thesis as entrepreneur. At the end of the day, I have one role as entrepreneur, and that is to generate the best outcome for everyone involved. Employees, investors, and most important, customers. That's priority number one, because at the end of the day, most of the trust that we are gain, that we achieve, is coming from the customers, because they are the ones that are having actually the biggest risk if we don't deliver. And when we got to the proposal, at the end of the day, I was saying, okay, now what's the story here in terms of my commitment and my responsibility? I think CEO's responsibility is to land the ship, because at the end of the day, if the company is now 10 years old and we did not land the ship, everyone does not have the ability to liquidate these investors, then it's a challenge. Would I prefer that proposal came 12 months later? 100%. Because we're, as I said, really early stage in terms of sales. Actually, there, one of the biggest deals was closed really a few days before closing. That was kind of the tipping point of the company, huge financial organization, saying that is the future of network and point security for us. Let's go. And there is something that you always kind of throughout the course and saying, are we really doing this? Are we really doing this? Is it a good idea? Is it good? And like you wake up every single day and you ask yourself, should we continue with that or should we halt? Both Oad and myself actually are really on the fence until the end. But looking at all parameters involved, apart from our own ego, saying we wanted to take this company IPO, so taking that outside of the equation, but thinking what's good for everyone involved. We thought that was the ideal outcome, and especially for our customers, because the ability to execute in the scale that we want, the ability to get to 100 million enterprise browsers in the world, the ability to pretty much become the core future of endpoint and network security, the ability to be a significant part of the story of the SASE, the secure access service, the ability really to provide that on a distributed work environment, the ability to provide it like this with the power of Palo Alto. There's just no better house. Like there are probably today almost 10,000 sellers selling to almost every global 2,000 companies in the world. The ability to speed up that vision, nothing could be faster and better than that. Then the question is, what are we optimizing? Is it kind of my personal reputation, ego, customer, employees, investors? And for the employees, this has been amazing outcome, because significant part of the deal has been RSU packages for the employees, which for them it's been like for most of them it's been like a significant IPO.
Yeah,
really significant. And
because you've only done 2 rounds, so you've had far less dilution. And if you had done 3 or 4 more rounds, it's not clear that even though the enterprise value would be much higher, it's not clear that the net dollars that they would walk away with would be the same or more than what they could get now. So it's kind of time value of money, and you realize your passion, and you realize your vision at this point.
Exactly. And then we've done actually exactly that Excel calculation also in the discussions I did with Palo Alto. By the way, they also kind of pushed and said, look, do the math, understand what it takes from here to take company public in terms of the dilution, in terms of time of value of time, in terms of our risk, and especially for the employees.
It's it kind of talks to the point that sometimes in the race to raise money and to raise your next round, it's really the wrong thing that you're optimizing for as a founder. You should be optimizing for how do you reduce dilution and get the most value, create the most value in your company, i.e. revenues, gross profit, things like that, to get to a point in time where you can do that spreadsheet at any point in time and see what is that calculation and how does it affect, as you said, customers, your investors, and the employees and founders.
I have a thesis for this. So, by the way, I'm also looking at this period also from an angel investor perspective. So I'm investing on average in 1 startup a month.
Yeah.
This is kind of my average over the last 3 years, probably more than 30 investments so far. And always I'm looking at this in terms of, okay, there is the concept of, and there is the startup dead zone, kind of the area that no exit can happen. Depends both on kind of, I don't believe in that term, but the total addressable market. If it's bigger, then the startup dead zone starts in higher number. If it's a smaller one, it starts lower. It always ends at about 2.5 billion. So every company with, say, 300, 400 million ARR can probably go public. But then there is kind of from 200 or 800 or 900 to 2.5 billion, that this is the risky area. Either you can execute to 300 ARR, then you can go public, and again, you can allow the liquidation for the employees, investors, or not. But in that area, you're not going to be acquired. The second that the startup got to there, we need to be extremely confident that we can reach 300 million in ARR, which is ridiculously tough. Right? The amount of companies that have been really able to execute on that is extremely limited, right? And that was the point that we have been actually facing exactly that decision, because we got many offers for investment in an awesome $1 billion valuation to say, okay, are we going for that phase, or we need to do a little bit and to see that we already have this confidence to get to 300 million. And when a company is selling for less than a year, pretty much, and to do that act, to jump to that valuation where you're still so far from knowing that you can get to 300 million, it's a very risky decision. And I think that was kind of you've touched the point of we need to be responsible in these actions as entrepreneurs. I think that is the tricky part. But I think that the initial valuations matters less in that area. I know that there has been other discussion. We raised pre-money of 10 or 20 or 50 or 70. I think that's the easier part. The challenging is
that in the middle. Yeah.
That's where it's really tricky.
Great. So, couple of ideas and thoughts. We almost out of time. Maybe if there are any questions that anyone want to ask.
Thank you for the session, guys. The resilience side is very clear for me. On the growth, I've heard a bit about the customers. We know that most of the CEOs, number one job, at least theoretically, was to raise money, and we are that. In terms of growth and recovery, don't you think that CEOs must be outside to run sales and close deals much more with a much more preference now anything else, even raising?
Correct.
I think it depends on the type of the company. There are companies that sales is not led by sales. I don't know, like so it's really dependent on the type of the company. I find myself much more doing talks right now and conversations, especially because my co-founder was in service during until a few weeks ago, and he was the one out there. Yeah, I feel like for me, I'm much more outside the during this time. Yeah.
I think it depends the stage of the company, right? I never saw myself as responsible to raise money. I think this is one of the topics. But if you ask me, kind of first stage is responsibility to have an 80, because at the end of the day, if you put the right people on the bus, you don't even need to generate a vision. They will generate a much better vision than what I will do. Second phase is probably to unlock barriers which are happening for the team in all areas and other early stage sales. And then it is to build a go-to-market machine, because obviously you can get to 100 million ARR if you are the seller company. So I wouldn't say that there is one role for CEO. It has to adapt probably every 6 to 12 months based on the progress of the company. But CEO has pretty much a role, and that is to unlock barriers and kind of to get the hands dirty in the most challenging task for that time of the company. But raising money have never been, at least for me, the main role of the CEO. Obviously, we need to do it. No other person in the company is doing that better than the CEO. But I don't think this is the actual role of the CEO, unless you see it differently.
No, I agree. One thing that we tell certainly our early stage CEOs right through the mid stage of the company is that a key OKR, key KPI is ABC, we call it. Always be closing. Always close deals. You set a personal example. You are the true North Star of your product. You have to understand your product if you're closing deals. At that very early stage of a company, up to the Series B, C even of the company, our most successful CEOs are the ones that have gone out there and helped to close deals or have led the big deals, but as Ofer says, have also managed to transition to a sales-driven organization where there's, a head of sales, CRO, etc. Thank you very much for coming, and to thank again our speaker, Stav from Alta, Ron from Empathy, and Ofer from now Palo Alto, and congratulations again on your unbelievable exit of Talon. Thank you. Please hang around and have fun.